Economic data from January has signalled the strongest improvement in business conditions for the non-oil private sector for nearly 2 years. This was highlighted by the seasonably adjusted Emirates NBD Dubai Economy Tracker Index, which registered a reading of 57.1 at the start of the year, up from 55.9, signalling the fastest rate of improvement in 23 months. The index also showed that all the 3 key subsectors monitored by the survey recorded marked rates of expansion. Travel and tourism remained the best performing category at the start of the year, with a reading of 57.8, closely followed by wholesale and retail at 57.7, and then construction at 55. The index measures changes in output, new orders, employment, suppliers' delivery times, and stocks of purchased goods. A reading of below 50 indicates that the non-oil private sector economy is generally declining, while above 50 shows expansion. The wholesale and retail sector signalled the strongest rate of activity growth in 7 months, with some firms linking the increase to promotional activities to stimulate client demand. Meanwhile, construction firms widely cited new projects as the principal factor behind the increase in output. Despite the steep increase in business activity, job creation was modest overall, although the pace of staff hiring picked up slightly since December. Diversification remains a crucial strategy for the GCC states, as the GDP growth rate will continue to remain below the global average this year. That's according to speakers at the 6th Annual Investor Forum. Organised by Masah Capital, over 100 financial experts, analysts and investors gathered during the one-day forum, where discussions were held related to the impact of the global economic environment on the GCC and MENA region. Speaking during the forum, the head of asset management from Masah Capital stated that their estimates suggest that non-oil GDP growth across the region will grow to 3.1% by the end of 2017. Furthermore, inflation across the region is expected to average below 2.9%, which is below the global average of 3.2%, according to their estimates. With regards to the UAE, the spokesperson from Masah Capital stated that the country is expected to continue its diversification policy. However, the oil price fluctuation will continue to influence the decision-making in the short term. While stating that oil prices will continue to range just below $60 a barrel, experts added that active portfolio management for investors remains key in challenging times. It was added that the region as a whole still promises a wide range of opportunities for foreign investment.
For us, it's important for at least the regional economies to start diversifying even more, because obviously oil, we don't expect it to go beyond the 40 to 60 region. So if oil stays within that region, then governments have to diversify and find other avenues of growth. So the trend lines on the non-oil side are good, which means that most countries are actively looking at growing the non-oil side of their GDP. I think Saudi Arabia is obviously, it has concerns. It needs to rely less on oil, so they're taking more drastic steps as compared to maybe UAE, which has been actively diversifying its economy over the last couple of years, so they don't need to do as much. So country-wise, it tends to be different, but yes, everyone is more in tune with the fact that they need to find revenue drivers other than oil.
The forum also included a talk delivered by the financial commentator John Authors from the Financial Times, who discussed the impact of the global economic environment on the GCC. According to Authors, consumer confidence in the US is higher than it has been in a decade under the Trump presidency. Furthermore, it was added that the increased popularity of French presidential candidate Marine Le Pen continues to pose a threat for the future of the Eurozone, which raises concerns across the world.
If the Trump agenda manages to stay on course without major shocks there, if the Eurozone manages to keep bumbling along without a major accident, and if China manages to keep its economy on track, it's got a lot of debt, if it manages to keep its economy on track even after the party congress at the end of this year, then yes, we should have reason for optimism. I don't want to put a chance view on all of those things going right, however. I am personally nervous. I think markets are priced for everything to go right. So I am nervous, but it's possible. It's possible that things will go well.
According to official figures from the Abu Dhabi and Dubai Securities Exchange, the value of margin trading finance reached 85.7 billion dirhams in 2016, an increase of 12.7% from 76 billion in 2015. An analysis by Emirates news agency WAM shows that the value of the margin trading finance presented by brokerage companies to their clients constituted 23.5% of the total value of all deals done in both markets. This reached a total of 364 billion dirhams from both buying and selling at the end of 2016. The growth came with a sustained rise in the number of brokerage companies, with 35 companies out of the total 48 working in the Abu Dhabi and Dubai Security Exchange markets during the past year. The total value of margin trading finance in the Dubai Securities Exchange touched 70.5 billion dirhams, which constituted 26.46% of the total of trading in the market for both buying and selling, while the value of margin trading finance in the Abu Dhabi Securities Exchange reached 15.2 billion, which formed 15.4% of the total value of the registered exchange last year. And Air Arabia has announced its full-year financial results for 2016, with the low-cost carrier continuing to deliver healthy growth and strong levels of profitability, despite challenging market conditions. Air Arabia's net profit for the full year, ending December the 31st, 2016, was 509 million dirhams, 4% lower than 2015, of 531 million. Turnover for the full year was in line with the preceding 12 months, reaching 3.8 billion dirhams. The carrier revealed that it flew over 8.4 million passengers last year, a 12% year-on-year increase. The average seat load factor, or passengers carried as a percentage of available seats, also stood at an impressive 79%. Following its full year 2016 performance, Air Arabia's board of directors has proposed a dividend distribution of 7% of share capital, which is the equivalent to 7 fils per share. In the fourth quarter of last year, Air Arabia reported a net loss of 33 million dirhams, despite maintaining a strong average seat load factor of 80%. Air Arabia was ranked third among the top 50 airlines in the world in 2016 by Air Finance Journal. And the carrier was also named Best Low-Cost Airline Serving the Middle East at the Business Traveller Middle East Awards.